Hi guys, so let's take a look at our trade that I have done today. So basically, what I've done here is I have sold three lots of 19,100p and 19,600p. And basically, why I have done such a trade was very simple. I did it based on my OI analysis and the plain chart that I've seen on the screen. So let's look at the chart over here. So we can see that the market had already given a good correction sign. So with keeping that in mind, I had kept a range of 19,000. My range was between from 19,600 to 19,100. So I was expecting, I just don't want to take much risk, so that's why I keep a broader range. And also now the market is in consolidation with inside bar, right? So whenever a candle is there inside, it means that the market is in a consolidation mode. It can spend some time, a few days inside a small range. So when the expiry on Thursday comes, we can easily sell the above the higher range of the option in the higher range 19,500 and the below range of 19,300. So basically, that's what the price action is showing us in Nifty for the day, for 1 day time frame. If you take a look at Nifty, it's also showing us some bearish sign. Uh, Here it was showing evening star pattern, and after that, we can see that the market gave a bearish sign, and then after that also gave a doji candle. Still, it's like the bullish people came and tried to push the market up, but again the sellers have won and tried to push the market down. So that's why we can see a small doji type of indecision in the market. So if the market is breaking this level, then definitely we can expect the support to be this will be a great next support. And now the gap has been filled, so basically gap is also filled. And also we can also see that a retracement, a 50% correct retracement will be this position. So almost 14,000. So almost this range, 44,000. So 44,400 to 44,000 will be a good support region. So if a good retest comes, then we can again expect the market to come like this, take us support over here, and again market, because we are in a very good bullish market, right? So the market can go in that direction, and Nifty is also gonna trade in a range. And if this level is broken, the next it can next if these levels are broken, the next it can coolly come down to this level. So this is the next support zone it can immediately find, and then there'll be few bouncings. We can see a few bounce near the gaps, so gaps can act like a good support zones. So also make sure that you keep your trade safe when it comes to the near market, because they can come and hit on the upper gap and again go back up and then again come down. So that's how basically gaps work in the market. And I guess that's it about the market. And let's take a look at how price action has worked in Nifty. So let me just delete this. If you take a look at a 5 minute chart, so if you can see, we can see that clearly. We can mark some levels. So important levels we can mark, and okay, here is a great support zone. That's basically market's gap. So this will be a great support zone. And also we can see that there was sharp. We can see this as a good resistance. Okay. Okay, now here we can see that. So here we can see that market has seen a sharp selling at this point, right? So we can see sharp selling, and next time the market went tried to go up. First time it came down, and markets always try to take money from retail traders, right? So basically, what retailers will do, they after seeing this red color candle, they'll think like, okay, the market is gonna go down, so they'll all be going short. So the market went reverse, took all their stop losses. This is called stop loss hunting. So market took all their stop losses, and again it came down. So that's how easily the market can take away money. So always have your stop losses perfect. Here, obviously, if anyone was trying to take a trade from because of the resistance, they would have all they would have. This is how trap works basically in market. So here also we can see that there was another support resistance zone. So if I take, yeah, here also we can see that, yeah, it's a good. So here also we can expect, we can see that the market also from here also, so exactly from that point also the market came down. So here it was a good sign, and here was a very good sign that the market was looking for a bearish high. So if you can take a trade over here, keeping a stop loss here, you can actually ride and get one is to two risk reward. And again, the market again went to that place, and again the levels were respected, and again red bearish candles kept forming and hammer patterns kept forming, and the market came down again. So that's how simple price action works. If you can mark your levels properly, and just wait for your turn and keep your stop loss and target intact. Any strategy you take, at least lower 50% of the time. So if you're making 50% of the time with 1 is to 2 risk reward, in the end of the month, you will be in profitable trade. And we can see another support zone as well over here. So here is another support zone. Yeah, and here as well. So these are some intraday levels important mark. So that's how it works. If this is breaking, then this is the next support. This is the next support, and next it will come down. Yeah, to the, because the gap has to be filled, right? Some other that the gap has to be filled. So we can also look at this trend line also being getting formed. So we can see a good trend line being formed. Yeah, so here the market is again going over here. If red candles are being formed over there, here red candles are being formed over there, then again we can expect the market to slowly come down. So if we can expect a breakout, if it's breakout, then we can expect the market to move up again. Or if it is these levels are being respected, the market can come down as well. So that's how simple price action patterns are working in stock market. So that's basically about our trade for today, and yeah, it's almost showing this much profit. And if you can analyze it, yeah, let's click on analyze. Yeah, so as long as the market stays in this range, we'll be in profitable. So here on expiry day, if this is the price point on expiry day, we have a probability of 86% to win, and these are the break. So as long as the money is, as long as the market is in this range, 19,070 in the lower and 19,630 in the upper, we'll win profitable or at cost, cost to cost kind of trade. So and at last, let's take a look at the options chain again. We can see there are a lot of called writings being done at 19,400, 19,500, and the next huge call writing here also a bit call writing is done. So we can expect the market to be in this range. So that's why I took 19,600 as a range. See 19,600. We can see even call writing at 19,000, 20,000. So based on the market current movement, I was like, I wanted to keep this range 19,600 to 19,100. So here also we have some put rating, so we can expect the market to be in that range itself. So that's it, guys, and I'll catch you up in the next video.